Okay, good morning, and on behalf of Ken, thank you to Oil and Gas UK for inviting us to speak today. Now, as mentioned earlier, Ken has only returned to the North Sea over the course of the last year, primarily through first the corporate acquisition of Agora Oil and Gas, a private equity-funded explorer. This deal was followed a few months later with the purchase of Nautical Petroleum plc, who, among other things, are one of the companies really at the forefront of the effort to commercialise the UK's heavy oil resources. Now, these deals, I think, were generally very well received by Cairn's shareholders, but I believe they did take some in the industry by surprise. So what I would like to do today is briefly outline the role the North Sea plays in Cairn's global business, and perhaps from a more universal point of view, just highlight some of the aspects of the North Sea that encourage Cairn to invest in money here in preference to some of the other competing basins around the world. Now, when I talk about the North Sea, I'll be referring to both the UK sector and the Norwegian sector. At Cairn, we firmly believe we need a position in both areas in order to build a business of sufficient materiality. Now, I think it's certainly true at the moment. There's a perception that the UK is very much the poor relation when it comes to exploration. So I'd just like to offer the view of our team who've been working for many years, mostly in the Norwegian sector, on the relative challenges and opportunities in each area. Okay, so Cairn Energy, a fairly well-known London-listed, Edinburgh-headquartered E&P company, perhaps most famously for building a pretty substantial business in South Asia over the last 20 years. Now, this South Asia asset was actually floated as a separate company called Cairn India on the Bombay Stock Exchange back in 2007. And over the last 18 months or so, Cairn Energy plc, the London-listed entity, has substantially sold down its shareholding in Cairn India to the point where we now just have a 10% residual stake with no seat on the board and therefore no control or influence. Of the proceeds from that share sale, $4.5 billion has been returned to shareholders, but the rest has been retained for reinvestment in E&P. So what does the new portfolio look like following the divestment of that South Asian business? Well, essentially it has two arms. The first is what we call transformational exploration. This is frontier areas, high-impact wells, with the ability for a single well to significantly move the company's share price in the success case. But of course, this inherently risky activity needs to be balanced with lower risk assets elsewhere in the portfolio. And this is the role that the North Sea plays in bringing development projects, perhaps lower risk exploration assets to the table. And also, apart from providing an overall risk balance, as our development projects come to first oil, they will provide a cash flow that will in fact fund our frontier exploration campaigns in the future. So if you like, the North Sea can be seen as the engine of Cairn's global exploration ambitions. Why do we choose to invest here? I think first and foremost, the quality of the assets available through Nautical and Agora. Certainly Mariner, Kraken and Catcher are all high-profile pre-development projects here in the UK and probably need little introduction. Agora also came with an exploration drilling programme, and the second well after the takeover yielded the Skarfjell oil discovery in Norway, a significant discovery in a strategically important part of the shelf, and we were particularly pleased with that, as in a former life our exploration team developed the prospect at Ravus Energy. What these four assets bring, apart from a good resource base, high-quality operators, is they are all standalone projects, that is FPSOs or platforms. And for Cairn, with a heritage as an operator of developments, this was important because it minimises dependency on downstream infrastructure holders with all the potential for cost overrun and project delay that can sometimes entail. But we're not just in the North Sea to develop. We saw exploration opportunities here. We intend to drill perhaps 5 to 7 exploration wells a year. Now, of course, given the state of the North Sea, the maturity of the North Sea, we don't expect individual wells to be transformational to Cairn's share price, but we do believe over a drilling campaign or a portfolio, if we can find what we predict we're going to find, we can add what for us are significant contingent resources to our portfolio. And of course, in time, these will convert to reserves and ultimately to cash flow to drive the business. Important to note, we don't believe we can access sufficient quality opportunities only in the UK. Neither do we believe we can access sufficient opportunities in Norway. We need a presence in both areas in order to build a business of sufficient, a programme of sufficient quality. Now, political stability is often cited as an advantage of the North Sea, and it's perhaps easy for us to be blasé about that, but as the dreadful recent events in Algeria remind us, we are very fortunate to work in what is a very benign climate with respect to the global industry. I think a final advantage of the North Sea, and perhaps an understated one, is the very high asset liquidity there is here, by which I mean there are frequent farm-ins, there are a plethora of license rounds, corporate deals, asset packages. All of this means that it's relatively quick for a new entrant to better build a material position in the basin. Once they have a position, it's easy to trade assets, to optimize a portfolio, and indeed, if desired, to divest or spin out a North Sea business. I think this flexibility was attractive to Cairn. Now, while it's relatively easy to persuade people of the merits of investing in the kind of quality UK developments that I've just mentioned, some people do ask me why we don't focus our exploration efforts solely on the Norwegian sector. And in fact, these three statements here have been put to me several times over the last 5 years. I call them yes buts because they're all quite true, but they do need qualification in order to get a deeper understanding of the relative opportunities in Norway and the UK. So starting at the top, common statement, geology doesn't stop at the UK-Norway median line. It's the same geology, just different administration. And of course, that is true, but I must say one of nature's little tricks in several specific but very important details, geology does actually stop at or near the UK-Norway border. We could talk about this all afternoon, or at least the geologists amongst us. I think what I would say in summary here is that we believe the UK has more plays, that is more levels or geometries where hydrocarbons can accumulate, while Norway certainly has more large structures. Of course, from the point of view of a mature basin, that is significant because most of the large structures have already been drilled. And we would anticipate that it will come to be seen that the UK had more accumulations in, let's say, the 10 to 20 million barrel range than does Norway. And of course, where we are in the maturity of the basin, that is the bread and butter. Perhaps a related statement, the Norwegian sector of the North Sea is much less mature than the UK sector. Again, I would agree with that, but I would also caution that a lot of people underestimate how quickly the Norwegian sector is catching up. It was certainly the case 10 years or so ago when the licensing system was liberalised in Norway, that there were a lot of opportunities, tracts of very lightly explored acreage, and early movers such as ourselves at Ravus, Lundin, for example, were able to build good positions, develop ideas and plays, and ultimately drill them with the drilling success we've seen in Norway over the last few years. But of course, success has attracted new players into the basin, and it's certainly the case now that acreage is being worked much harder before it's being relinquished, and therefore prospects are not jumping out of the seismic workstation anymore. A final distinct attractiveness of Norway is a very generous exploration refund system, whereby no less than 78% of one's exploration costs are refunded at the end of the tax year. This was a radical innovation and is really one of the things that's driven the renaissance in Norwegian exploration. But of course, when looking at the specific question of comparing an exploration dollar spent in Norway versus an exploration dollar spent in the UK, we have to remember that well costs in the UK are significantly cheaper than Norway, and of course that dilutes a lot of the beneficial effect of this otherwise very generous tax refund system. I think some of these themes can be seen in recent licence rounds in the UK and Norway. The UK 27th round is very good interest, a lot of acreage taken up. No fewer than 17 firm wells committed in the mature North Sea area, actually with a very healthy mix of participants, NOCs, utilities, small independents and super majors. In Norway, the recently announced APA round again was extremely competitive. A very high proportion of the offered acreage was taken up, but not a single firm well was bid. Now, I find that remarkable, and certainly if someone was to arrive to work in the North Sea basin with no previous experience, they would be very surprised to see those statistics and then be told that it's the UK that is by far the most mature sector. Another theme of the round was very high competition, not just between companies, but also with the state oil company Petoro, which actually took the most awards. They were the winner in terms of licenses awarded. Petoro is assigned equity in licenses that are deemed to have strategic value to the Norwegian state. And what this graph shows, comparing past licensing rounds, that not only did Petoro get more awards this time, but they took more awards in North Sea exploration, that is the red colour here. And of course, every equity percentage taken by Petoro is less for the rest of us to squabble over. So I think that gives a good snapshot of where we are in Norway. Very exciting, good opportunities, but perhaps tougher than some people realise to dig out the prospect, and very, very competitive. I think in the UK, and this has been touched on by both the earlier speakers, the challenge is remaining cost competitive in order to convince people to keep assigning exploration investment to this part of the basin. This is particularly difficult at the moment because sentiment is so positive towards spending money in Norway. Now, an analysis we did back in 2009, we found that an exploration dollar spent in the UK actually yielded the same risked value as an exploration dollar committed to Norway. What has happened, unfortunately, since then is a decline in that position. This is firstly due to the cost increases mentioned earlier. Well costs have increased significantly over the last 2 years. This is due to higher rig rates and perhaps also to more conservative well designs post-Macondo. At the same time, the effect of the 2011 budget was to reduce the value of a notional UK discovered barrel. So together, these things mean that the UK has lost competitiveness against Norway on an analytical basis, even before you consider the sentiment about exploration, which obviously drives a lot of what investors think. Of course, if one has production and a tax shelter, then exploration becomes much more cost efficient. But I think one of the dangers we face is that to have production and a cash shelter, you both need financial capacity and some kind of development expertise. And that does not apply to the entire exploration community here in the UK. Some of the smaller players who may have some of the ideas that can unlock future potential in the basin may not have the means to test their ideas with the drill bit. So I think in summary, Cairn is back in the North Sea and very pleased to be so. It's an important part of our global business, both in balancing risk, but also in providing a cash engine to fund our exploration ambitions elsewhere. As well as developments, we will be active explorers, both in the UK and in the Norwegian sector. And I think, despite the challenges in both sectors that I've raised here, we still firmly believe both Norway and the UK are very good places to explore. I think from the industry point of view, as I said, one of the main risks we face is dislocating people with ideas from the ability to test their ideas by drilling. And this is an issue that I hope will be worked on in the coming years. On that note, I'll say thank you.